Are you confused about the differences between your LLC entity type and an S Corp election for tax purposes? Many entrepreneurs are, if you're one of them. Roxanne will break down the relationship between your corporate structure and tax treatment. She will cover the benefits and pitfalls of electing S Corp status. You're listening to Closing Market Weekly, the show where real estate closings meet real world insight. With your host, Phillip Hogan. And every week we break down the trends, tools, and the timing that keeps deals moving forward. Let's dive in. Hi, I'm Phillip Hogan, the host to Closing Market Weekly, the CEO to Signing Services of America, and the author to my debut book, Relentless Excellence, a story of family, business building, and value-driven leadership. And welcome to another show. And, you know, it's taken a long time for my guest to come on to the show, but I'm so excited to have her because she's got some very interesting information that she will share with you. And I think that you'll find it very enjoying. So without further ado, let me do a quick introduction, bring her to the stage, and then we're going to get right into it. So for 14 years, attorney Roxanne Smithers has been a member and manager of Smithers Law Group, LLC. Are you confused about the differences between your LLC entity type and an S Corp election for tax purposes? Many entrepreneurs are, if you're one of them. Roxanne will break down the relationship between your corporate structure and tax treatment. She will cover the benefits and pitfalls of electing S Corp status. Roxanne, welcome to the show.
Thanks so much. So excited to be here, and I am happy to dive into this topic because I come across a lot of organizations and entrepreneurs who are confused about the difference.
Yep.
And I'm sort of taking it as a bit of a mission of mine to explain the difference. And it doesn't necessarily seem like the most exciting or sexy topic, but it is important for folks to understand the distinction when they are making decisions about their company structure and then also that relationship with the IRS.
Absolutely. And there are many benefits to, you know, making this decision. And so let's get right into it so my audience will be able to absorb all that great information that you have to share. So yeah, go ahead. You want to say something? Go ahead.
I was going to say, so this, I think the origin of this came from the fact that we have a YouTube channel, Notes from My Legal Pad, where we put out our 5 to 7 minute videos about different legal business topics. And I try to bring them from what I'm seeing trends with clients and what I'm seeing in my space where I do volunteer work with entrepreneurs and business owners and organizations that support them. And I was seeing this trend a lot, and I was like, I've got to figure out a way to get the word out about this. And so we're getting that video out, and then we were spreading it out to our network. And thankfully, you also saw our sort of posting about it. I think our newsletter that went out, and it caught your eye. The topic. So I'm glad we had the chance to spread the word even further.
Absolutely. You know, and so, you know, and I'm glad you sent it and I received it, and, you know, but it feeds right into the purpose of Closing Market Weekly, right? We're about educating people. We want to empower folks, right? And so all of the guests who come on to the show are bringing their expertise of knowledge to help empower and help people grow and expand their brand. And so you coming on to the show to talk about your content is spot on. And I think that the audience will also appreciate it because it does consist of a number of people who are entrepreneurs. And the topics that the topic is something that many people don't talk about. It's not a common conversation, right?
Right. Yeah.
And, you know, more importantly, is like, you know, if it does come up, do they have somebody in the circle that they could talk about with? They could talk this about, and they may not. So you may be the person that they want to reach out to after today's show to say, Roxanne, I heard you on Closing Market Weekly, and I'd like to follow up and see how you can help me address some of the pointers that we're going to talk about today. So the first question I have for you, you ready?
Yes, let's go.
Let's go. So So for notaries and signing agents operating as an LLC, what actually changes if they elect S corp tax treatment versus just staying a default LLC?
Right. So, one of the most important things that I want to make sure people understand is that distinction. So, the cool thing about the LLC structure and why most entrepreneurs and business owners, especially on the small side, will start out with that structure is it is a hybrid structure. It sort of sits in the middle of the different types of entity structures that you can have because it gives you this wonderful flexibility. It has a level of complexity that you can have where you can act like a corporation. If you have multiple partners or members that are part of the business, if a lot of people want to come into the business, and you can have a lot of structure, but it also can be a little more informal as if you were a sole proprietor and you were operating on your own. And because of that, it is a nice entity structure for people to have where they get protection from personal liability, they get legitimacy for their business, they get some beneficial tax treatment, tax deductions, tax reduction for expenses that are part of the benefits of setting up an entity versus simply being a sole proprietor and operating under your own name. And they've got this flexibility in the structure. And the way that flexibility works is you have these options in the relationship that you'll have with ultimately with the IRS, which is your federal taxes, which then trickles down to your state taxes and how your dollars are taxed. So there are two primary ways that your dollars are taxed as a business owner. There's single taxation, which we call pass-through taxation, which is what happens when you're a sole proprietor, when you're doing business in your own name, or you're a partner, or you are a default single member LLC. That is where every dollar that comes into your business is then treated as income to you personally. It is then taxed as is taxed as income to you personally. That means it's going to be taxed at the personal income tax rate, which generally speaking is the higher tax rate that individuals pay when you're just out working in the world, right? It's relatively simple, which is why people like it for that reason. Now, I will say, disclaimer, I am not a tax attorney. I'm not a CPA. So the ultimate nitty gritty ins and outs, you'll want to go to those experts for that. But this is where the business attorney side kind of marries with the tax side. So it's usually why you have these two professionals coming together to help a business owner optimize their the operation of their business. You have these professionals working together to give you the best chance that you can have for your business.
Sure. Having you coming to the show, Roxanne, is as an attorney, right, and a very well-respected attorney and well-expected, experienced attorney. You know, your responsibility, if you will, is making people aware what are the options. What's available. Sometimes people don't know what's available, right? Now that you're sharing what's available, now that you open the door or pull up the shade and we're looking out the window and see, oh, that's a big vast land out there with all these options. You now want to say, okay, go to your attorney, go to your tax preparer and say, hey, listen, or your CPA or whoever's doing your tax, and say, listen, I heard this great show and Roxanne Smithers was talking about this. And what do you think?
And couple that with a business attorney to make sure you have the legal side, because oftentimes the tax person doesn't always advise about the legal side of it. And that's where people get into trouble. So if you have that pass-through taxation, the dollars come in, you pay taxes on the dollars once. You'll report everything on your personal tax return and you're taxed at that higher rate. With an LLC, you also have the option to tell the IRS, hey, I would like to be taxed as a corporation instead. That is what is called making the S Corp tax election. So there's a form that you would complete and you submit to the IRS. and you're telling the IRS, for the purposes of our relationship and how you're going to tax my dollars, I want you to treat my business as a corporation. Now, you are not changing your legal structure. And this is where people get very confused. And oftentimes, unfortunately, the confusion is compounded because their tax person is not using proper language. And they are, unfortunately, making people think that they are changing their legal structure when they're not changing their legal structure. They're simply changing their tax treatment. And so then your dollar is taxed twice. And this may sound like, well, why would I want the dollar to be taxed twice? And I'll explain. At that point, the corporation, every dollar that comes in, the business will pay taxes on the dollars as a corporation. It pays it at the corporate tax rate, which is a lower tax rate than the individual income tax rate. So you're paying, at 15% versus maybe 30%, depending on how much money's coming in. Here's what people miss, and oftentimes the CPA or the tax preparer does not tell folks from the legal side and where the business attorney comes in. In order to get that benefit, that carrot, there's a stick that goes with it. As the primary business owner and member of your LLC, you are then required to make yourself an employee. You have to put yourself on payroll, and you have to then put yourself on salary and pay yourself as a W-2 employee. You can no longer simply pull funds out, what we would call disbursements, however often you were pulling money out, whether it was weekly, monthly, quarterly, whatever. You have to now put yourself on a payroll, and you have to treat yourself as a W-2 employee. You have to do withholdings. You have to do unemployment tax. You have to pay all of the fun stuff that used to come out of your tax when you worked for the man.
So now you got to do it yourself.
Make yourself the man to yourself.
Gotcha.
Right?
Gotcha.
And you have to pay yourself a minimum market rate for your role in your company.
Right.
And that amount of money that you pay yourself as an employee is then taxed at the income tax rate.
Yep.
And then anything else that you pull out of your company as a owner of the company is then once again taxed at a corporate rate. So profits that you pull out quarterly or at the end of the year are then going to be taxed at like a capital gains rate, which again is at a lower corporate tax rate.
We want to make sure that we stay within the legal side of this conversation, and then advise and take your information, but take it and present it to their tax preparer. Say, this is what I've heard from a business attorney, and what do you think? Right?
Exactly. But this is why they want to understand why. And so, and the reason you do this is the theory is once you do this extra taxing, you save money overall. Okay. So everybody wants that benefit. The problem is very often they miss the piece where they have to put themselves on payroll and make themselves an employee. And that's where the business owners get into trouble. And as the business attorney, we often come in on the back end and have to help them kind of clean up where they have missed putting themselves on payroll as a employee. And there are penalties that are associated with not putting yourself on payroll as a employee. Like as soon as you hire someone into a company as an employer, you have a reporting obligation to the State Department of Labor. There are payments that have to be made. There's withholding. There's verifications of your ability to work as a W-2 employee. And so you are now in non-compliance. And we don't want you as the business owner to now be in a position where you've put yourself at risk with the Department of Labor, either federally or statewide, because you're seeking that tax benefit that you might have every right to have.
Right. Okay, great. So we have a few more questions that we want to go through in the short time that we have together. So my next question is, at what income level does an S Corp election start to make the real financial sense for someone in this industry? And when is it not worth the added complexity?
Sure. So part of the reason that you start to think about whether you want to make that tax election is when you are making enough consistent revenue to actually, one, afford to make yourself an employee. The rule of thumb that when I'm working with clients and they're thinking about having an employee, either themselves or someone else as an employee, I always say 130 to 140% of what you are intending to pay the employee is what it costs to have a W-2 employee, to be an employer. So whatever's the amount you intended to pay them, tap on 30 to 40% for the cost to be their employer. So once your revenue is to a consistent place and what you are compensating yourself out of your business is to a point where you can consistently afford 140% of your compensation, that can be a good indicator that you might be in a position where it makes sense to consider that election. That's when you start the conversations with your tax preparer, your CPA, to run the numbers to see if you will actually reduce your tax liability if you put yourself on payroll and you actually took all of the deductions. Would you actually save money on your taxes? Okay. So that's the gauge that I recommend folks look at.
So what's that? Please repeat that magic number again.
But between 130% to 140% of your target compensation.
Between 100 and 140% of your target.
130 to 140%.
Okay.
Yeah, because that's sort of the cost to an employer to have an employee.
Okay, good stuff. Great. All right, next question here. You're doing a great job. And I hope my audience is listening. And if you need to, fortunately, have to replay this with pen and paper so you can take down some notes, then by all means do it. So next question is, what are the hidden costs or requirements for payroll? What are the hidden costs or requirements, payroll, reasonable salary rules, extra filings that catch people off guard after they make the S Corp election?
Yeah, that's what I got ahead of it a bit. I'm so excited when I get into this in terms of explaining it. As I said,
that's okay. That's okay. We like excited people.
You get so passionate about taxes, and payroll.
Yes.
But when you understand it and the implications of it, you get excited about it. So as I was saying, there is that carrot, which is the potential to reduce your tax liability, right?
Yes.
The stick is that primary members of the LLC are required to be W-2 employees.
Right.
And they are required to then be paid the minimum market rate. So you do not have to pay yourself at the top end of the salary, like the most that you'd have to pay for your position in the market. But you do have to pay yourself what is the minimum sort of market rate for your position, and you have to pay yourself that in as your compensation as the employee. And that's obviously to try to combat fraud for people putting themselves on payroll and paying themselves a salary of $2 and then only paying income tax on $2 worth of salary and then still pulling everything else out as profit at the lower tax rate, right? So those are the rules. And then all of the things that go along with having an employee. You've got to do E-Verify, which now you do online, where you confirm, you're sort of confirming that you are allowed to work in the country.
Right.
You have to report to the state Department of Labor that you have hired yourself. Most states, there's an online process. There's also a form that you can submit by mail, by fax, in person. You can do it online. That's how we get those job reports every month, by employers submitting records of all of their new hires. That's how we get those statistics that are released by the government. And then you have to, on an ongoing basis, you have to collect your W-4 withholding. You then have to withhold the amount from your paycheck that is your employee contribution to, your Social Security, however much is being withheld for state and federal taxes. And then you have to pay the employer side of that as the employer, and pay the employer side of unemployment insurance on your behalf as an employer. So those are the sort of stick side of that, the requirements in order to get that benefit and to be in compliance with the rules. Now, and as I said, the caveat is you can have an LLC that has several members and only maybe one or two members are active in the management of the business. So only the members who are active in the management of the business have to become employees. So if you have somebody who's passive, they've got 5%, they are not active in the day-to-day running of the business. You're not required to make them an employee. It's people who are in the day-to-day running of the business that have to meet this requirement.
Roxanne, thank you for answering that question. And the reason we ask is because many times, and I'm guilty of this, sometimes I've jumped into the water without testing the temperature and realized that it's either a little colder or warmer than what I expected. And oh my gosh, while I'm in the water, I've got to readjust, right? So having you, the business attorney who's a pro, come on to the show to talk us through, and maybe at a high level, what are some of the pitfalls that we need to look out for? What are some of the flags that we need to look out for? What are some of the questions that we need to ask ourselves before we jump into changing from an LLC to an S Corp? Hopefully this show will provide that. And I think this is a good time for folks to contact, if they want to contact you, Roxanne, go ahead and leave us some information as to how someone can contact you.
Sure. Well, the easiest way to catch us is always our website, which is stulawgroup.com. It's going to get you great information about programs that we have going on. We're always doing partnerships for legal education. It'll get you to our YouTube channel. You can always just go to our YouTube channel, which is Smithers Law Group. Our Instagram handle is Smithers Law Group. We put out information on our other socials besides Instagram, our Facebook, and our LinkedIn. But that website's going to be our portal to everything.
Repeat that website again, please.
It is stulawgroup.com.
Fantastic. Okay, let's get back into questions. So we got two more before we wrap up. Is this a decision? Excuse me. Is this a decision someone should make when they first form their LLC, or can they wait and elect S Corp status later once their business grows? I think I know the answer to that question, but you're the pro, so you answer it.
Yeah. So generally speaking, I will say you can always wait until your business reaches a certain level of revenue. The only caveat is, if you start your business with a significant amount of funding and you are going to be taking salary from the beginning, it depends on the type of business that you are starting and the level of capitalization that your business has from the start. So if you've got significant funding either from investors, or you are taking third-party loans to start the business and you're going to be working full-time in the business and you're going to be taking a salary from the start, then, and it is a revenue intense business, and having the benefits of very early sort of favorable tax treatment will be beneficial, it could be something to consider. Okay. I still think it's important to work with an experienced CPA to run the numbers to really know whether or not it'll actually make sense, if it's going to actually benefit you. But if you're going to be on payroll as an employee from the beginning of your business, based upon the financials of how you're founding it, then certainly the election can make sense from the beginning. Fantastic. But if you are in a more modest founding position, you're self-funding, you are sort of eating what you kill, you are not going to have consistent or guaranteed compensation or funds that you're pulling out of the business right off the bat, then one, you are not necessarily going to have a significant tax burden anyway, because you're not going to have, profits that are taxable at the beginning. You may well have more expenses than revenue early on in the business. And so the election will not serve you. It will just put obligations on you that you are not in a position to meet. And so in that instance, it certainly means that you should wait until the election for that tax treatment would actually provide a benefit to your business.
Great. So my last question is, what's a mistake you commonly see business owners make when trying to handle this election on their own instead of working with an attorney or tax preparer?
I think with this election, as well as a lot of sort of critical decisions, there is a rule of thumb that people should always operate by. Which is most things that sound too good to be true are usually not true, or there is going to be a catch associated with it.
Say that again, please. Say that once.
Most things that sound too good to be true are either not true or there is a catch associated with them. If the carrot is big and orange and juicy, there is a stick with it. And that's not a bad thing, but every sort of incentive, there are going to be requirements that go along with getting that incentive or qualifying for that incentive. And so if you keep that in mind, whenever someone is presenting to you, hey, there's a great way to save on X or avoid Y or pay less for this, always say, wonderful. What are the obligations that go along with it? What's in the fine print? That's not a bad thing. That's just the reality. And particularly with tax incentives or with government regulations, because the most of the time, government incentives are just that. They're incentivizing certain behavior that they want. So they're giving you something because they are wanting to encourage certain behavior. So if they're offering something, you have to be looking at, okay, well, what is the behavior that I have to do in exchange for the thing that they're offering? That's not a bad thing, but be aware that there's always two sides to the coin. So make sure that you understand that before you make the decision, because it's a lot easier to plan and do things right the first time than to undo it or fix a problem. So I always tell people, it's far less expensive to get some guidance at the beginning than to pay a professional like me or even a seasoned tax professional to fix a problem. Right?
Yeah. Yeah, it is. It is. And so, Roxanne, I think that's a great place to put a plug for you and how someone would want to contact you. You said the name of your website is where?
Sure. It's STU Law Group. And as always, you can Google me. You can just Google me. It'll get you to our website.
Right.
We offer consultations where you can just do hour sessions with us,
Right.
where you can get some, insight and without a full-on commitment, because I know people are sometimes gun shy about committing to lawyers for the long term. And I also encourage folks to check out that YouTube channel because it's a lot of great information there that is free of charge. And anytime an attorney is offering information free of charge, you take advantage of it because it does not happen frequently.
I got that right. Grab it quickly and hold on tight and put it to use, right? So STU Law Group.
Yes.
Great. STU Law Group, folks. That's how you can contact Roxanne Smithers. If you're listening to this recording, you're missing out. She's a beautiful woman who's got a really beautiful, brilliant smile and has such positive energy. And, she would love to work with you and talk with you and help guide you through the process of converting from an LLC to an S Corp.
Making the election, the entity stays the same.
Yes. And you see, so she's spot on. So listen, so that wraps us up for another show on Closing Market Weekly. Thank you for listening. And by the way, if you like what you hear, tell a friend, tell a family member, tell a colleague that Closing Market Weekly's got it going on, and you should follow them on YouTube, Spotify, or Apple. And until our next episode, we'll see you then. Take care, everybody. Bye. Thanks for tuning in to the Closing Market Weekly. If you found this episode valuable, don't forget to like, subscribe, and share it with someone in the industry. For more insights from the front lines of real estate closings, we'll see you next week.